Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gone on its way. In this game, no more bills to pay.
Hello, hello, hello. What's going on, everybody? All right, so this is take 2, the second live of the day. Okay, we're going on fire. What's going on? All right, so my flight is headed out tomorrow, and I wanted to go ahead and make another live. Okay, but I've been wanting to do this live for a while. Now, again, for folks that are watching this thinking that I only made one live, this is the most recent live. No, that's incorrect. I made 2 lives. Definitely check out the most recent one, which is this one here. Okay. That one already has 800 views, which is amazing. And then this one right here, we're talking about AMC versus Clover Health. Okay. I hope the internet's going to be good. Again, I'm using the hot box because it's, the other one's just not working. So hopefully this works. Forgive me if it doesn't. So if you don't recall, this is looking at the quarterly. All right. I made a post not too while ago regarding this image. Now, again, I put a lot on Reddit. Hold on. So before I even say that, I didn't post this on the Reddit page because it had AMC in it. Again, I want to respect the community, but for all the moderators that watch the channel, if you think that this is okay to post, I think it's helpful, but if you think it's okay, go ahead and post it. I just don't want to piss off the community because it is AMC. This is not a AMC Reddit page. So there's that. So, I posted an image on Clover in the Clover Reddit page not too long ago. And I'm trying to find it because it really fits the ticket. I mean, it really does. It fits the ticket well. And I'm just trying to figure out the situation here because it really just does a good job. But the issue is it's just a long time. I just can't. Damn, I post a lot. Okay, we found it. Okay, here it is. Okay. So I posted this 2 months ago. I wish it gave me the date. It looks like it was in August, which seems right. Does this by any chance give you the exact date? Because it says here 2 months, right? So we posted it 2 months ago. Is there like a button that says, give me more information about the date? It doesn't. Who cares? 2 months ago, I think it was more. I think it was August. You know how like computers, it's like 2 months and a half, but it says 2 months. I think so. It was in the beginning of August, and it was, we could backtrack this, honestly. It was the second bar, and it wasn't that high. So it was like right around, yeah. So it was near August, which I guess we can zoom. Let me zoom in. Can you zoom in? Yeah, it was sometime here, okay? Sometime in August. And I said, this is very bullish. Get ready. I wish the price. I wish we got the price in there, honestly. Anywho, the reason why it was in August. Okay, so you remember it was in August? Thanks. I'm sorry. I'm just, let me see if I can get the price. If we can get the price right here. It was at, there it is. It was at $2.83. Okay. And I said, the title was, the title was, this is very bullish. Get ready, get ready to rumble. And if you go ahead and look at it, the price was 283. And then if you look at here, the MACD hasn't crossed. Okay. And then now I said, get ready. And if you look at Clover after, August is here. It was like right somewhere here. It's up another 50%. Okay. Someone on the Reddit page commented saying, somebody said, this is my technical analysis is not correct. I think it was right here. Somebody said something, it's important that, the quarterly, and I was like, no, that's not. And, they're saying that, no, this is, stocks just don't go up that high. And he was, again, at least he was sharing his ideas, but, we were talking back and forth. And and that's the beautiful part about the community, right? Being able to have the discussion. And, now, we're here and Clover's up even higher. But interestingly, if you were to zoom in on the MACD, I'm just going to take a screenshot of the MACD real quick. I'm just going to take a screenshot here. And I'm going to just, if you look at here, the MACD was all red. Okay. If you were to just open up an image that I just took a screenshot in, the MACD just crossed and we're at a green. Okay. And this is quarterly. This is not the 4 hour. This is every bar represents approximately 3 months on average, right? Quarterly. And you can see that, this is the start of Clover ascending to the moon. Okay. And again, it's hard to find folks that talk about this with no BS, just usually, using technical analysis. Oh shoot, I saw this video and I bought shares for my birthday, which is in August. That's how you remember. Yeah, we make so many videos that it just they all get jumbled in my head, So if you don't recall, we also talked about Palantir, and Palantir, MACD crossed and it did a complete U. I also remember talking about Oscar and how it's pretty much doing the same thing, right? It went ahead and was going up. And now we have Clover doing the same thing, okay? But if you go ahead and type AMC in the quarterly, this is what AMC is doing. It went up with the squeeze and it basically crashed. So the question we have to ask ourselves is why? Why did AMC crash? And unfortunately, there's going to be a lot of people on here that watch the video that are going to talk crap. And, this is your problem. I can't fix, that. But if you beg to listen, and just listen to what I'm saying, you might learn something. Okay. So, all right. So let's go ahead and let's open up. And again, this is our stock terminal. If you want access to our stock terminal, we have over, see if I can find it here. We have our Main Street sale coupon code, Main Street, one word, $600 off. And we have over $55 million in our Al Stock Trades platform, and we create millionaires. You know what I mean? I know that these are outlandish comments to make, but this is the truth. And we can look at other stocks like Nvidia and whatnot. It's not just Clover, right? So what I'm going to do right now is I'm going to open up the help menu for the brain machine, right? I'm gonna look at stock fundamentals. I'm gonna hit the next page here, and then I'm gonna look at quarterly data, and I'm gonna type in the quarterly data for Clover, and then it gives me the data, and then I'm gonna go ahead and type the quarterly data for AMC, and it's gonna go ahead and give me the data as well. And then I'm gonna look at both. Okay, and this is gonna be kind of an easy thing here. We're just gonna open up Clover's data. Okay, then we're gonna zoom in a little bit, and then we're gonna open up AMC's data. Okay. So we open up these data sets, okay? And the first thing what I'm going to do is I'm just going to go straight to a couple of things here. We're gonna go ahead and go to 2022 930. Just pick a number. We're going to look at EBITDA, okay? This is for AMC, and where the hell's Clover? And we're going to go ahead and take a look at EBITDA here. Okay. So you could see AMC recently got to a positive EBITDA. Okay. Clover did as well. In fact, I think they were EBITDA positive. And I think this is needs to be updated. But if you look at EPS here, let's do EPS from 9. I'll just keep picking Q3 here since we're going to go to Q3 this year. You can see the EPS is positive, and for AMC, the EPS is negative. Okay, but they are EBITDA positive. That's going for them. Okay, net income wise, they're negative for AMC, and for Clover, they just had their first profitability, right? So, you're starting to see that Clover is now becoming a profitable business, while AMC is still burning cash. Okay. Now let's go to the balance sheet, and again, this is just kind of rudimentary, just quick analysis. So now let's go ahead, and this is where AMC. This is what why we're pulling this chart up. AMC's Achilles heel is its liabilities. Okay. So if you look at the, overall liabilities, so Clover doesn't have any debt, right? They've got liabilities, but they don't have, debt, like in terms of debt that needs to be serviced, right? So let's just overall look at the liabilities for Clover. Look at the liabilities here. They got about $349 million in liabilities. So this is the total liabilities. And if you look at the assets here, we got around $674 million in total assets. Okay. So assets with liabilities, assets went out. On average, it's pretty good. Okay. Likewise, we've started to rebound on the equities. Well, it's better to use this one. Total shareholders' equity, it's gone up. In fact, it's been going up for 3 quarters, okay, versus how it's been going down because they were burning cash. So they're rebounding, and they're actually providing shareholder value now. But their liabilities is around $349 million to $674 million. Now, if you look at total assets for AMC, they have $8.5 billion of total assets, and their total liabilities is I have to make the column bigger, is $10 billion. Okay. So they have more liabilities than their assets. And a great way I remember liabilities as debt is, do you want to be liable for somebody's life? Of course not, right? That liability is something you have to take care of later. And unfortunately, in finance, liability is debt. And let me just give you an example. Pretend you only have $8, but you're in debt for $10. You're going to be in negative $2 debt. So AMC is negative $2 billion in the water, which means that they got to figure something out. which is why they've issued a lot of, ape coin, bape coin, zip coin, all this bullshit coin, because they need to dilute shareholders. So if you look at dilution, if you type in AMC dilution, you're going to get all AMC dilution is over, on our way to the, this guy's freaking insane. This guy, you're going to get a lot of news that says the 250 proposed share sale. Again, they are trying to dilute because they're trying to get out $1 billion, $2 billion. Honestly, they're in the water. Okay. So now let's go to my favorite metric, which is free cash flow. This is Clover, not Clover. This is its second consecutive quarter of free cash flow positivity. You look at AMC's, again, this is all part of our, brain machine. Look at AMC. This is Q1 and Q2. They are down $238 million in free cash flow, and parentheses means negative, and then negative $79 million. So you can see, again, negative free cash flow means you can't really put anything in the thing, intrinsic value. Okay. So let's just see the revenues. Are the revenues going up at least? So to do that, we could just kind of look at, we could look at it this way too, but this is the Q, Q1 to Q1 interview. The revenues are pretty much kind of look like they fell for Q2. Yeah. So it seems as the revenue for AMC is not really growing, but I could be wrong. Yeah. So revenues have been going down 23%. So they're growing negative, but we can call it 0%. So assuming that things are going to be good for AMC, let's open up our intrinsic value calculation real quick. And this is like kind of bare bones calculation here. This is not even I'm just like calculating just to calculate right now. You open up the help menu for our brain machine, open up master analysis. Let's look at the Wall Street data set. Type in AMC, let that basically process the data and get it. Let that process. We'll go ahead and open up our intrinsic value real quick here. Okay. And then we're just waiting on this thing here. Hopefully it processes. Give it some time. There it is. And you can see the free cash flow is down here. It's holy shit, dude. This thing's negative $500 million. Holy, am I reading that right? Holy crap, dude. Negative $500 million. Holy crap, dude. Look at the, holy shit, man. Yeah, this ain't good, guys. Revenues. Yeah, so we could just take the revenue right now, which is 4,813. So we could type, damn guys, this sucks. Yeah, so 4,813, we can do 0.05. We can go ahead and multiply this out. We get 200. Again, hey, I'm taking 5%. I'm assuming they're going to be at 240 million of free cash flow, assuming that they get out of the negative $500 million free cash flow, like negative 500 million approximately, negative whatever 400 crap million they are in negative, assuming that they could get to 240, which is that's a crazy thing to assume, but assuming they could get to that, right? We can go ahead and figure this out. So 240.65. We go here, we go 10 years, and we're going to type in growth 0% because they're not growing right now. And then for the share count, we could look at, they're at 322 million. Damn, are they really at that many million shares? This can't be true. They diluted literally more? Holy shit. I mean, just look at this dilution, guys. Holy shit, dude. Like the pandemic, they were at 27 million. So you know how many times, if this is correct, AMC downloaded freaking since 2019, AMC diluted shareholders 26.8 times. Holy crap, dude. This can't be true. Hold on. Let me go to Yahoo Finance for a sec. Holy shit, dude. That is because again, I haven't looked again. This is a live, right? I'm looking at AMC in real time for you guys. So let's look at maybe statistics. Maybe it's under here. I don't know. Let's figure it out together. Outstanding. Holy freaking Maloney. 361 million shares. Outstanding. No wonder why no outstanding shares for AMC. Holy freaking moly. Woo! Dude, I feel so bad, dude. Yeah, so it's saying 360, but we're going to do with hours 322. So we put in 322 here. Damn. Let's see the price. So with $3.22 growing at 0%, AMC is either going to be a recession of 337 to a bull of 827 with a $5 and 20 cents, right? And if you look at AMC, let's kind of look at the overall. So if the 52-week high is 11 and the low is 2.38, so it's falling somewhat in line for this. Now you might ask yourself, I'm sorry, why what? I don't understand your question. So it's growing at 0%. Now if they were to start growing at, I just don't know how a movie theater can grow. I mean, with all the streaming services, we could start seeing a little higher, but I don't think I don't think growth is there. And we're assuming they're going to be 5% of free cash flow. Let's go ahead and let's say 0 free cash flow. You can see the stock is nothing. I would say, to be on the conservative side, I don't feel comfortable putting 5% of free cash flow because that's $240 million in free cash flow. We can assume this. Let's assume let's assume the best for this company. If they can get to a positive $240 million of free cash flow, then yes, this could be a $5 to $8 stock. Okay, which is pretty much what the market is pretty much pricing right at this point. Right, it's pretty much what it's been the past year. It's been going up to, here's your 6 and fall. Again, it's been near it's been going to its base case and falling. So to see the base case here, 685. Right, the base case is 685, which then goes in line with our intrinsic value of 637. But I'm more conservative. I want to say 0.01. We could say 48 million of free cash flow. I don't think that, there's a probability this thing can go bankrupt. So yeah, I don't believe in this company at all. I mean, it's very clear. You put, yeah, I just don't see it. I just don't see it. No, because the thing is with Clover is they have patience and data. They have the data sets, right? So, and are you shorts are going to lose their mind next week? I mean, it's always next week, right? And they're going to lose their minds next week too. And they're going to lose their minds the week after that, right? You know what I mean? So now let's go ahead and let's do one for Clover. Now, just out of what does Yahoo show as the growth rate? Oh, yeah. So we could go ahead and look at, analysis. And overall, it's saying that it could grow 12%. That's what the analysts are saying. It's saying negative, then it's saying it could grow. And I don't know, guys. Let's see what the price target is that it's saying. Yeah, I don't know. I don't know. See, the price targets are ranging from 8 to, it shows you how strong our platform is. If you put in 24065, because they have to be honest right now about AMC, because it's just people feel. The analysts feel honestly bad that a lot of shareholders lost their shirts on this one. If you look at AMC on the low end, the low price target is $3.20, which is right around our intrinsic recession case of $3.37. And the bull case is $8.27, which falls in line with the analysts saying the high is $8. So I mean, it's pretty damn accurate on our intrinsic value, which I usually never see. It's just they probably feel bad for AMC investors because, I mean, look at the max of AMC. I mean, they're down 94. If you bought AMC back in 2013, you would be down 94.98%. You would be down all your money. I mean, this is a complete destruction of shareholder value. I mean, Adam Aaron has just destroyed. This guy has just, you know, like, this guy has just destroyed the crap. I mean, holy crap, man. I mean, I just feel bad for this guy. Like, holy man, this is just, what is he even posting? What is he posting? Like, he's just writing off of the investors. So that's literally what he's doing. It's really sad, honestly. He uses the word FUD. Yeah. Wow. Yeah. It's just sad. Anywho, going ahead and looking at the master Wall Street data sheet for Clover. Yeah, honestly, it looks like it is an image of him underwater, doesn't it? If you look at Clover, just really quickly, we could just kind of pull up the intrinsics for Clover. They're growing at 1.3, and you could 0.5. You do this, multiply this, you get, let's say, 65 here. They're growing at 11% right now, and then you do 496, and you can see, at 11%, at 65, you can see kind of the price here, right? That's 11%. The question you ask yourself is, they just increased star ratings, so they're going to return to growth, and on top of that, that's why it's at $4 versus $3.21. This is using 5%. So they're going to increase their gross margins, meaning they're going to get more money out of the the overall health care insurance side, and they just created a SaaS-like business with Counterparty Assistant for the AMC folks that haven't been keeping up. Yeah, exactly. Patient doesn't have access. Palantir doesn't have access to the patient data sets. You're right. I wouldn't trust I wouldn't trust what analysts say for the growth rate of Clover. It's saying 5%. That's just a bunch of bullshit. I mean, I don't think that's the case. No way. I think it's going to be more. I don't think so. And there's only 2 analysts too. Yeah, the other one had like a bunch of it. Had like 7 analysts or something like that. So I don't think so. So for Clover, what I think is going to be the price is, first off, I think their gross margins are going to be so good that I think they're going to be able to get 7% of free cash flow. We'll be fair, 0.065%, which is so 6.5%. I think they're going to get 84.5, and I think they're going to grow at 25% in the beginning, and that's going to show you a stock price anywhere between $3 to $11.48. It's going to be more on this end, which falls in line with our passing the $4 mark, going to our 747 resistance line around $7, and then there it is. And then once we get to a level where we got everything under control, I think it's going to grow at Oscar level, which is 45.86%. Remember, Oscar was founded in 2012, while Clover was founded in 2014. So I think they're going to be able to compete. Let's say if we put in 45.86 here, we can see Clover, anywhere between 9 to 47, or from the base case 31 to 47. Okay, and if you don't recall, you go to YouTube just so you can see kind of. There's always been a plan, right? There's always been an overarching theme of this. So this was 3 years ago. 3 years ago, the price target was always anywhere between $18 to $35. Right? This was. Let me show you. You don't see the $3. Sorry, this was 3 years ago, right? Oop. So this is like, oops. Shout out to you, Drew. Where is it? I can't even find it. Here it is. So it's about pretty much 3 years ago here, and yeah, $18 to $35, which falls right in line with this one here. So we've always pretty much seen this. It's just when were they going to return to growth? They had to drop growth because of just ACO problems. Imagine if the Greek guy fixes this and then they turn on the growth machine for that. That's profitable. Holy shit, right? And yeah, I know I tried to talk to AMC folks on YouTube and explaining to them, but over the past 6 months, AMC's been up 27%, which is great. Was that $3? It's great. 6% for around 27% for 6 months. Clover is up 545% in the past 6 months. Now, year to date, it's different. Clover's up 316%, and AMC's down negative 28.64%. So we're up 3x our money year to date. AMC's down 28%. So this is why fundamentals matter. A lot of people were saying, fundamentals don't matter. They do matter, right? Now, a lot of folks are going to say, oh my God, Clover's just as good as AMC. The price, again, it's not about the price. It's about the market cap. Market cap 1.58 billion for AMC, market cap 1.99 billion. Okay. So we were calling out AMC when it was at Clover at 300 million around that market cap. Now it's in the billions. Okay. And if you look at the news now, everyone's saying, oh my God, it's doing so good. All this, BS, right? The media will always follow the money, right? So I just wanted to make this video because I think it's beneficial. Obviously this is not like a I told you so, or this is just straight up data analysis here. Okay, I just wanted to basically show you data, and it really reaffirms how accurate our intrinsics are. Our intrinsic, if you go to Bloomberg Terminal and pay $2,400 a month, you will get close to our intrinsic value. They share it in the Bloomberg Terminal. The problem is you have to, here, this is the cost of a Bloomberg Terminal. You could get the Bloomberg Terminal instead of ours. It's a better product, I can tell you that. It does way more than our platform does. We have 2.5 billion outputs. The outputs for Bloomberg is like freaking in the gazillions. But you have to pay $25,000 a year. It costs $25,000 a year. So you take that divided by 12. It's going to cost you around $2,000 a month. And if you want to get like extra data, they charge an extra $400 a month or something like that. So, if you want really good data, better than ours, and it shows our intrinsic value calculation, yeah, go ahead, Bloomberg all the way, but it costs you $25,000. Ours doesn't cost that. It's a one-time payment, and we have a freaking, where the hell is it? A coupon code that gets you $600 off. So, this is easy math. But again, sometimes people can't do math, and that's unfortunately what is required. We do it for you on the Al Stock Trades platform, but if you can't interpret it, then just you need to. I laugh when people say I suck at math. Math is not for me, and to me that translates as I'm always going to be an employee, and I just need to listen to my boss and listen to the corporation. So anyhow, that's just it's unfortunate, right? So. Yeah, but the thing is, it's very hard because it goes back to the discussion with Andrew today. You have to talk to doctors and see what doctors want. This is a big thing, and by the time Palantir gets into it, it's going to take years before that happens. and and then and then by then it'll probably hit my intrinsic value, my true intrinsic value, which then I can just kind of dip out, right? Or pretty much basically get my shares for free. So later on, this will be phase 3 of the mastering and bundle. That's why I'm telling you, this is a cheap, right? It's cheap as hell, but we're gonna get to a point where once it's at a certain intrinsic value that I think is reasonable, I'm gonna start doing covered calls and even cash secure puts if I get called out, the wheel strategy on my large stockpile, which means I could I'm pretty much going to get all my shares for free, and then I take that money out and then I buy property and then I'm just going to let that ride. So and I'm not going to say this on YouTube because I just don't have time, but it's going to be in our terminal, and people that are members, that are lifetime members, are going to take advantage of it. They're going to ultimately take advantage of this, and that's where the money is going to happen. We're going to be printing cash. There's going to be people on our platform making $300,000 a month to $1 million a month, and some are going to make $2 to $3 million a month, and even more. Right, a month. I said, not a year, a month. So this is it's hard. I mean, like I think we have a really good product, right? Our product is it is the master product, right? Our product makes you so much money that you can buy all the products you want, right? Which is kind of really stupid and dumb. I hope you buy experiences, which is you get to go travel and stuff, and education and whatnot. All the what's it called, Versace and Salvador Ferragamo and all this bullshit doesn't really add much value to your life. But learning other cultures and whatnot, that does. Okay, just weighing the risks because I scooped up some shit. No, you're absolutely correct. You're absolutely correct. And we talked about that leak, and then the stock went up like $1.50, all the way up to went from like $2.75 to like freaking like $4 and whatever 70s. Like, we're doing pretty good, right? I appreciate you, Jacob. And I think hopefully you join our platform because we like to have other people. Every discussion that you're having, we've already had the Palantir discussion, right? Every discussion you can think of, we've had in our stock terminal, right? And Belize isn't a testament to that. We've had every discussion you can think of in our platform, because again, the whole point is it's kind of like it's like Swiss cheese model, right? We want to be able to figure out the issues in a problem and do a multi-layer improvement analysis and figure out, is there a hole in our investment thesis? So, what you're doing is correct, and that's what we do, right? Because if you have multiple holes and they go through, then you're going to be at significant losses, which is what a lot of AMC folks did. There was all these holes pointed out to them. They said, no, it doesn't matter. Fundamentals don't matter. And then, this is the outcome of these people. They're down 94.98% in their money, right? Literally 94. This is what happens, right? So, you get to financial losses, right? No, yeah. So I appreciate you, Jacob. You learn this in the hospital system too, right? If like a nurse makes a mistake because of a labeling issue, well, it's the hospital system's fault for making it easy for a human to make mistakes. They should make it to where a human can't physically go forward because like the bottles don't fit in the, for folks that are in the healthcare setting, you know what I'm talking about, right? So we try to do this. That's why we have 2.5 billion data sets, which is why we're so successful in our market, in our Al Stock Trades platform. Anywho, guys, yeah, so my flight's are early in the morning, so I just wanted to make this live just to get it out of the way, because I haven't talked a lot about AMC, but I just wanted to just make this almost, I think, like one last final video about AMC. We maybe make an update, but that's pretty much the power of understanding fundamentals. You're either down 94% or, you're up 500% pretty much, right? That's pretty much it here, right? Or, I guess it's not fair. We can just do year to date, up 300%. Or down 28%, right? So that's pretty much, we can do a fair analysis here, right? All right, ladies and gentlemen, I hope this was enjoyable. I will see you on the next one.